Hello and welcome. I'm Tommaso Eridani, and this is Story Scanner, the podcast from Bocconi University with analysis and insights from Bocconi professors and researchers on the big topics in business, management, society and politics. Today, we're looking at the outlook and prospects for the economy and business, and in particular what this means for the younger generations, with our guest, Professor Michael Spence, winner of the Nobel Prize for Economics in 2001 and Distinguished Professor of Economics here at Bocconi. Not yet out of the pandemic and still feeling the aftershocks, last year was also convulsed by the war in Ukraine, which apart from the humanitarian drama, also impacted energy prices worldwide, inflation, interest rates and economic growth. And today's world is also shaken by great power rivalries, possible conflicts elsewhere around the globe, economic upheaval, the climate crisis, and rapid social and technological change. In its issue looking ahead to 2023, The Economist wrote that, in retrospect, the pandemic marked the end of a period of relative stability and predictability in geopolitics and economics. Today's world is much more unstable, and unpredictability is a new normal. And many of these issues are, and will, impact heavily the lives of the younger generations, especially as they look ahead to their role and prospects in the world of work and society. To discuss all this, together with Professor Spence, I'm joined by Julia Dhert, MBA student at SDA Bocconi, and Alessia Pulvirenti, who studies economic and social sciences at Bocconi. Professor Spence, thanks for joining us. So one of the great uncertainties seems to regard the outlook for the economy worldwide. Some talk of dire prospects and deepening recession, while the IMF, for instance, a few weeks ago, forecasts that while the fight against inflation is not over, the world economy was poised for a rebound this year and next, and that a global recession would probably be avoided. What is your outlook, especially looking beyond forecasts just for this year?
Well, it's certainly a complicated world we're living in. The IMF and World Bank forecasts have been bouncing around. The World Bank made a forecast of something like 1.9% growth in June and then lowered it to under 1, by the end of the year. So I interpret this as a kind of outside observer, as volatility that is associated with extreme uncertainty about what's actually going to happen. Having said that, we've come through, we have the kind of residual effects of the pandemic. We have misestimates about how fast they're going to go away. And I think the thing that's been missed, and is still missing in markets and forecasts, is that we lost sight of some really important underlying secular trends that are actually operating on the global economy. There are a variety of ways to describe this. I describe the world that we lived in for at least 3 decades, even with some shocks like the great financial crisis, as a demand-constrained world. We've made a fairly sudden shift. A physicist would call this a phase change because the differential equations that describe it are different, to a supply-constrained world. So what are the elements of that? Well, we don't have an unlimited supply of unused productive capacity in the emerging markets anymore. We have aging in 78% of the global economy by GDP, not population, but GDP. And we have this increasing set of shocks, climate, high frequency, increasing severity, war, pandemic, and geopolitical tensions, which you mentioned. And when you add them all up, it's just a different world. And one of the things that's happening in that world is that the notion of resilience or security has risen to the top of the agenda, or near the top. We used to live in a world in which, on the economic side, almost everything was decided by efficiency or comparative advantage considerations in terms of international trade and so on. Just not true. So everybody, companies, businesses that operate globally, businesses that rely on supply chains globally, and countries are busy diversifying their sources of supply in everything, from energy, read Europe. I mean, the best example of this right now is this high-speed diversification away from dependence on unreliable Soviet fossil fuels. And it's expensive, and it's disruptive, and it's a completely different world. So when you add it all up, I think that when you look forward, and including well past a year, and try to stare into the world that the next generation is going to live in, it's just going to, in multiple dimensions, it's going to feel very different. Different interest rates, different asset prices, different multiples, different growth sectors, the list just goes on.
And in the midst of this outlook, what do you feel are the prospects for the younger generations and the most critical issues they face as they prepare in the coming years to head out of universities and business schools?
Well, so if you stand back from this and look at it from a macroeconomic point of view, it looks like a mess, right? And that's a technical term. But when you look more closely, what you see is something much, much more positive. There is a set of fundamental transformations underway. One of them is the shift of the global economy to the emerging economies, especially to Asia, because that's where the people are and that's where the growth is. I mean, the country with the highest potential growth rate now in the world is India, taken that mantle from China, but there are lots of others, Indonesia, some of the Latin American countries too, even though they've struggled in the past. And then you have these big scientific and technological transformations, the multidimensional digital one. There's a similar thing going on, slightly less talked about, in life sciences and biomedical science. And then there's this dramatically huge energy transition that we have to go through, if we're going to survive. So in that territory, I think there's just enormous opportunities. There are technologies that have been not exploited yet. There are growth companies popping up all over the world. I mean, one of the most striking things to me, because I kind of hang out with, venture capitalists and growth-oriented investors, is there's just a global explosion of entrepreneurial activity, especially in the digital area. And it's just full of opportunities. I'm not saying everybody should try to be an entrepreneur. So when I look at it, it's not, a bleak picture. It's just that one doesn't want to take or get too attached to conventional career paths that the previous generations have used. These are going to be new and different and exciting. I think in science, in business, in tech, even in academia, people who have careers like mine have lots of unanswered questions and things we can do research on. So I'm not a pessimist when it comes to this.
And if I may add a question to Tomas's one, maybe when it comes to new entrepreneurial opportunities, especially for young people in new sectors, newly forming sectors, do you think that when you talk about there are many opportunities, that to me, at least as an Italian, applies mostly to thinking about the US, which has been traditionally the land of opportunities. But do you think that European governments or like the Italian governments are making enough of an effort for Italian young people to develop that entrepreneurial spirit we lack, probably?
Well, I mean, the straight answer is probably not enough. But let me, I'll color in the picture a little bit as I see it. So there's lots of entrepreneurial activity and creative talent here in Italy, and you can see that in the industries that thrive, especially the design, fashion, the creative industries, and so they're still there. I think digital will make inroads in there, so they'll be different, but equally exciting. If you look at this global explosion of entrepreneurial activity, I spoke about. So if you go back 10 or 15 years, you could count on the fingers of one hand, the sources of most of the digital, entrepreneurial activity. I lived in one, Silicon Valley, but, now you just can't do that, right? So, but it's still a local activity, right? In other words, it's everywhere, but it's concentrated. So lots of people count unicorns. They're private companies that achieve a value of market or assessed market value of $1 billion before they go public. So those unicorns are spread all over the world. I mean, the U.S. is the biggest source. China is the second biggest source. India has now become the third biggest source. But there's a whole bunch of them in Europe. Where are they? There's 20 some odd in France. Most of them are in Paris. Okay? There's a whole bunch in Berlin. I mean, in Germany, and most of them are in Berlin, and a few are in Munich. This is what I mean by it's still local. In the digital technologies, we have some very good companies in Italy, but we don't yet have that kind of critical mass that creates an ecosystem, where the entrepreneurs that are successful in the early rounds become the angel investors, and they know what they're doing, and they know how to teach young people how to build a company. And then all the complementary resources enter the picture, the VCs who are company builders, the best ones, not just risky investors, and so on. So I'm not pessimistic about Italy, but it's a little bit later than the others. On the government front, I think at the Italian level, we have a tough fiscal situation, so it's hard to just throw money at things. Our sovereign debt to GDP ratio went up to 150% because of the pandemic. Everybody's went up, so nobody goofed on the way through. It was just bad luck, and we started, pretty high anyway. So we're underinvesting, and at the European level, because we're not fiscally united, we don't have as powerful programs that create the upstream, science and technology part. That doesn't mean it isn't here. I mean, this isn't 0 or 1, but I think the scale could easily be beneficially increased at the European level, and it would over time start to show in spinning off these entrepreneurial activities in multiple areas. There's a whole bunch of really top flight biomedical, medical, and life sciences research already in Italy. So we're not a long way from being there, I guess is what I'm trying to say.
So when we think about the future of the younger generations, and Alessia, Julia here, for instance, one of the critical issues is related to demography. I think, Alessia, you had something in mind you wanted to ask about this.
Yeah. So thinking about us, younger generation, as we know, many countries from Japan to South Korea, Italy, Spain are stuck in these so-called low fertility traps. And as we know, aging of the population has major consequences on the sustainability of welfare states and on the future of countries themselves, but also of us younger people. So we've seen, for example, that in France, the government now wants to raise the minimum retirement age, despite the protests going on in the country. But do you think that governments across Europe are making demography enough of a priority when designing new policies? And also, I would like to ask, how do you think, in your opinion, young people can expect politicians to make demographically sustainable choices, where in countries, for example, like Italy, where the electoral base is mostly composed of adults and elderly people?
Like me. Right. These are very good questions, and they're also very difficult to give positive answers to. So let me just take it in order. I referred before, I mean, it's not just Italy and Japan. It's like China, the United States is a little bit less dramatically aging, but it's aging. Italy, Spain, most of basically the entire developed world is aging, plus China. And that gets you to a very significant fraction of global GDP. Now, how you handle that depends on where you are, right? And what the governance structures are. So I think you're right to point out that in the democracies we live in, the elderly people have been an increasingly influential bloc of voters, and they do not yet have a track record of voting in favor of the future. Investing in the future. There's lots of examples of that, but I'll give you one that's from my own personal experience. When I first came to Italy, which was about 16 years ago, we were living in Milan, and there was a demonstration once every 6 months in Rome against pension reform. And I watched. Some of them were quite violent. You remember this, Tommaso? Mm-hmm. And I thought. Finally, I turned to my wife, who's Italian, journalist, and I said, Juliana, do those people realize they're demonstrating against their own children? And she said, of course not. And so part of the problem is that people don't realize when they're demonstrating on behalf of themselves that the consequences flow over, even to things they care about. I mean, in America, public education is not funded the way it is in Italy. It's funded by local property taxes, okay? And bond issues. So you have a little municipal election. Shall we issue a bond to build out better school facilities? No. Well, we don't want to spend that money. So I think there are ways around this. I'm not as pessimistic as I just sounded, because I think, the answer. So let me give you an example that's not directly related to this. So if you go back to the early post-war period, there were many, many countries in which the average income was about $500 to $1,000 or less. There were even countries with less than $1 a day. And these countries have grown. Not all of them, but stunning growth. And the way you achieve that growth is you invest. And when you invest, you don't consume. It's just simple macroeconomic math that you've already learned. And so you can ask yourself, is it possible for a country with a $500 per capita income to start investing 30% of GDP in things that will benefit maybe these folks, in the next 30 years, but mostly their children and grandchildren? And they do. Not always. There's lots of sidetracks and places where countries have gotten lost. But there are lots of examples of that. And you know what happens? They get 7% growth for 25 years and become a high middle income country. And there's multiple versions of that. So with leadership and a real vision, about what's going on, I don't think the kind of worst narrow characteristics of democratic politics always prevail. And that sometimes there's breakthroughs and you get to a much more enlightened, balanced view. And the last thing I'll say about this is if we can't invest in the future in this way, how do we expect to invest in the future in sustainability? And then none of us will be around, right? So I think there's a mindset shift that's underway that's going to be required to deal with all these things. And in the end, it does involve balancing the present and the future in a different way. There's a book that I'm about to read that was recommended to me by an Oxford philosopher. I think it's called something like What Do We Owe to the Future? And it's really about this. It's about these intertemporal choices. But honestly, in the meantime, I think you can expect a fair amount of resistance to raising the retirement age. The aging process is going to increase the dependency ratios, as you said, and put pressure on fiscal things. So it's not going to be an easy transition.
Well, let's hope Alessia and Julia share some of that optimism you mentioned. Julia, I think you had a question.
All right, Professor Spence, I'd like to continue on the path we just took towards the future challenges as a driver for prosperity. And particularly, I'd like to talk about digital transformation and inclusive growth. So you've written a lot about both. You also already touched upon it shortly in what we just discussed. And I wonder if you could share a bit more. So where do you see those two concepts meet and how can it help us towards prosperity in the future?
Well, it's a wonderful question. Part of the problem in economics is that we knew there were distributional issues, but we basically ignored them for a long time. And now we've gone through, if you look at the data, right, in the post-war period, I mean, Piketty and company have wonderful, wonderful data going way back, and it's just fascinating. I spend a lot of time thinking about developing countries, and, from a global point of view, when the Industrial Revolution started, you had this massive divergence, right? Where kind of the 10% of the world that lives where we live, took off, not at high speed, but, 2% is pretty good. And the rest of them didn't go anywhere for 200 years. Now, the post-war period is a kind of basic reversal of that. So it's called catching up. Within countries, we've had a big impact from globalization. The economists at MIT, David Autor, Darren Asimoglu and others have documented that produced, along with digital technology, a pretty clear pattern of what they call job and income polarization, which basically means that those two things taken together, it's hard to separate them, took middle income, jobs out of the economy, didn't produce much unemployment in most places, and put those jobs somewhere on the outside of the tails, right? So you flatten the middle and put them out in the tails. And if you put enough people in the wrong end of the tail, then you get a problem. And we do have a problem. The rising income and wealth inequality that we have to combat. So far, we have not successfully combated this. And maybe there's two versions of digital technology because it's a pretty important player in this. There's the old version that everybody knows about that came along with a programmable computer, basically, which is we started to look at jobs that involve basically handling information, transactions and stuff. And we asked, do we not only know how to do those, but can we describe precisely how we do them? And the answer for some of them was yes. And for those ones, people set out writing basically those steps in code. And those jobs got replaced. You don't find many people filing stuff anymore. Pretty much all information systems that companies run on are now in digital form. Some have migrated to the cloud. It's getting better and better. And for that, you didn't need artificial intelligence. You didn't need breakthroughs in, image recognition, or writing essays, to take the latest round of examples. So now we have that set of breakthroughs on the verge of making inroads into the economy. My guess is most of that will feel less like automation and more like augmentation. Everybody has a very smart assistant kind of to work with, is the kind of analogy. But there's a chunk of the economy, any advanced economy anyway, that is so far not been dramatically affected. And those tend to be jobs in what the technologists call the atoms part of the world. That's, atoms is the physical world, including people, right? And the bits world, that's their other term, is the world in which all this information flowing around. In the atoms world, in manufacturing, you have a fair amount of digital, intrusion. But to take the extreme case, there's no chance in the near future that your gardener will be replaced by a machine. It's a completely unstructured environment. Even AI-powered robots with sensors, vision and other things, don't do well outside of structured environments. We've learned that from the autonomous vehicle work that's been going on for 10 years now. They do pretty well in a structured environment, like a parking lot or a freeway where the lines are clearly painted and there are very few places where you have to make a judgment call. But in unstructured environments, we're still, so every home is different. Robots that are going to be useful assistants in homes, or cleaning office buildings, or all kinds of things. So what I'm trying to say is there's a set of people, and it's a large number of people, who work in sectors where the work involves being there. You can't do it from home. It's not flexible. The beds have to be remade in a hotel and the place cleaned. And these jobs don't yet look like we can raise the productivity. So if you go to the data, this is current research that we're doing now, you have the big employment sectors in the United States are government, education, healthcare, hospitality, hotels, foods, restaurant, and traditional retail. They're all relatively low income, especially hospitality. The productivity growth rates are abysmal for those. They all have labor shortages because the younger generation and lots of other people don't want to work there. Why? Safety, stress, absence of flexibility, low pay. I mean, what a deal it is. So part of the answer to this is we're probably just going to have to pay people more to do these things, and those services will become more expensive. But a longer run answer is to get the technology that's had such a big impact in finance, in e-commerce, in fintech, in parts of healthcare, to advance to the point where it can make an intrusion there. And that, I think, along with policies that are directed in the direction of distribution, either redistribution if it's income and wealth, or pre-distribution, which is very high quality access to low cost or free services like healthcare and education. That will start to make a difference. You see, if you look at, there's 17 million people in the United States employed in hospitality. The average pay is something like a quarter of the United States average. And the value added per worker, which is an upper bound on what you can pay people, because you got to give some money to the owners of the capital, is, also in the low end of the distribution, and productivity is going nowhere. And that's the non-tradable sector, right? So what the non-tradable sector means, you can't buy it from somebody else, some other country. You've got to produce whatever it is, in this case a service, on the spot, so to speak, locally, which means there's going to be big demand for these services and people are going to be employed there. So I don't see, how we're going to get out of this without redirecting to some extent via incentives the research effort, so we don't keep getting chat GPTs and we start getting people who are, get help doing very fundamental tasks in the economy. Every single building, educational building, office building, government building in any economy is cleaned every night. There's millions of people employed just doing that. And so that's I'm starting to work with people who are very high-level researchers in artificial intelligence to try to figure out just how far away we are from having the kind of impact we've seen in other areas, in transactions, finance, and so on. Get out away from the factory floor and into these more difficult environments. But that's where we're going anyway.
Yeah, thank you. And if I may ask a follow-up question, so where do you see how we as a younger generation can add to that inclusive growth? And maybe probably this ties into the augmentation part of the digital transformation.
Yeah, I think so. So the people who are going to have to sort of solve this problem, the part of it that I described, but I hope I didn't give the impression that it's the whole story. It's not. I mean, there's a serious question about how you reverse the dynamics of wealth inequality once it's there, because once you're wealthy enough, it doesn't matter what your income is. Most of your income is earned income. Most of your income comes from the ownership of those assets and so on. The heavy lifting in the short run is going to have to come from the scientists and the technologists, because we really literally can't do this now. The people who do or think about robotics talk in terms of motion, moving around. I think we're made a lot of progress in that area. Situational awareness, AI's helping. Vision, robots that can't see aren't much, but image recognition has just gone past in the last, say, 5 years. Human capabilities, and so on. So again, that's a place you can be optimistic. The other part of robotics that is not relevant in all contexts, like, for example, autonomous or semi-autonomous vehicles, that wouldn't be relevant, but for, sort of helping in the kitchen, it would, which is what I call manual dexterity. And that's really hard. I mean, it's one of the first things a child learns, and it'll probably be the last thing that we get robots to do, because, they do, for example, they'll crush things, just by not knowing how soft they are. I mean, I know it sounds stupid, but a robot doesn't know the difference between, a carving knife and a zucchini. And, right? And if you don't do that, that doesn't come automatically to it. The other thing, so it's not that it's hopeless, but it's a very, very big set of things. And I think that we need real advances before we're going to kind of get there. In the meantime, we're going to have to rely on other mechanisms, like either highly progressive tax systems. People talk about universal basic incomes. I think they probably make sense for the very poor part of the population, but not, maybe kind of across the board at a high level. But that's a discussion that's going on in economics and policy that should go on. And if you look at, I keep going back to developing countries, but it's actually relevant. So you look across developing countries, or even our advanced ones, if you go back enough in history, what you find is that whether or not there's been any significant event that involved redistribution of assets, the ownership of the assets, you find all kinds of variety. So you didn't see much of that in Latin America. You saw a complete version of it in China. The government basically in the revolution took all the assets, and various other versions of it all over, scattered all over history. The interesting thing is that, as a matter of political economy, and this isn't sort of science, but it's at least intuitively interesting, is in places where you don't have you have high concentration of ownership of assets, like the nobility or anybody surrounding the crown, and you don't have some kind of major event that redistributes assets, then you tend to get persistent high inequality. Why? Because the ownership of the assets conveys power that influences policy. And you see very strong versions of this in Latin America, in former colonial places, and so on. So we may be edging in the direction in your generation of having to think of things that are more radical than anything we thought about before on the redistribution front, unless we get some help from the kind of growth patterns. I mean, the good news is that, if the first 30 years after World War II, the growth patterns in distributional terms were pretty benign. The middle class grew, income went mostly to labor, the share of national income going to labor kept increasing. So, God, it's hard to know, what the future will look like because there's so many variables. But I think the best news, I think, is that we're well past the period of ignoring the issue. And we probably can't, because it spills over into polarization and losses of, political and social cohesion that we see. I mean, people can debate about what the causes are, and nobody, I don't think, says this is the only cause, but surely it's a contributing factor.
So you mentioned how technology is already and will further transform and impact employment in certain sectors. But there are other issues impacting already how we work and the workplace. I think Alessia had a question.
Yeah. So still speaking of big trends and new trends and new transition in the way we work and in the labor market, we've seen that after the onset of the pandemic, we heard a lot about the Great Resignation. So many workers, especially in the US, but also in Europe, left their jobs, either exiting the workforce at all or simply looking for a different job. Then last year was the time of the quiet quitting. So there's a recent study from the University of Washington which found that male workers in the years between 2019 and 2022 on average have decreased voluntarily the number of hours they work per year. So there seems to be, at least to me, a general shift in attitudes towards work and the work-life balance. Do you think that this cultural shift, which apparently shows no signs of slowing down, will cause a permanent change in the way firms are organized? And also, do you think that in the long run, the ability of firms, for example, in Europe, to attract young people will be limited because young people seem to be the leaders of this cultural shift?
Yeah, I think it's a permanent shift, to be honest with you. I mean, it was, in a way, both forced on us and accelerated by the pandemic. I mean, we had to work from home. We lost our mobility, and we had the technology to do it in a subset of the economy that lends itself to that. This, by the way, is also adverse effects vis-a-vis the discussion we just had, because there's a bunch of things that can't be done from home, and they're not the high-paying jobs. So I think it's permanent. And there's a growing body of evidence to about that. Nick Bloom at Stanford has, done an enormous amount of work, including, very regular surveys of a wide range of people. And it all points to, one, people, value, especially young people, the flexibility and the work-life balance, that there's enough of them so the employers who are sort of on a slightly different page are being forced essentially to accept that to varying degrees. Some are enthusiastic about it. Some think of it as a way to be competitive in recruiting talent, which is a big deal for any company, but especially a techie-oriented one. I don't mean techie in the narrow sense, but, and there's no reason not to go down that road. I mean, I think the balancing effect that I hear from people, who are kind of younger than me, but still old enough to be running these organizations, is they don't want to lose the culture. So I think what's going to emerge, and to be fair, I think the young people don't want to lose the culture either, right? There are some people who want to stay at home, and work from home. But the majority, I think, if it's flexible, and the way it's emerging is Tuesday, Wednesday, Thursday. This is the way it is with long weekends. I mean, long in the sense of not having to go to the office. I think it's a permanent shift, and that's Nick's research. There's an excellent podcast, if you're interested, that was done by Michael Chewy, as a senior person at McKinsey and McKinsey Global Institute, and Nick. It's about 45 minutes long. It's really worth listening to, on kind of the color commentary on this subject. But the bottom line is, I mean, it looks to me like this is a very big change and enabled by technology. I mean, it was not possible 20 years ago to do this. It is now differentially possible, and I think for everybody in this room, it's an option. It's not going to be an option for everybody, and so we're going to have to think about that under the heading of, inequality, maybe in terms of the quality of the kind of life experience and so on. Quiet quitting, the Great Resignation was an important observation. I think there's a bunch of old people who said, I've had enough, and they had the balance sheets to support it. So that's okay. But one of the consequences of that is that when people who have a decent balance sheet retire, the labor force goes down, but the demand side of the economy doesn't. So you get an automatic shift in the balance between supply and demand, right? Every time somebody does that. Now, that's not true if they're dirt poor, but that's not the people who are voluntarily resigning. I think quiet quitting is just going to go away. It was a kind of, there's two versions of quiet quitting. One is reducing your hours, which is a way of just making a different choice about work and life. The other one is sort of not bothering to try very hard when you're working, right? It was like a different dimension of quiet quitting. I don't think that'll last, right? I mean, that'll get sorted out in the market, sorted out or priced properly in the marketplace. So if the employer doesn't care, if you don't care, and they don't have to pay very much to get you because you don't care, maybe that'll be a place in the labor market, but I don't think it's the most interesting part. I think the interesting part comes with a different set of options for young people with respect to work and life that are different and pretty attractive, I would say, relative to the generations that came before.
So I think we have time for one last question. Julia, you wanted to ask something?
Yes. So, Professor Spence, we are recording this podcast on the Bocconi campus, and I think on the campus is the easiest place for cross-disciplinary interaction. You're literally a room apart. So I would like to take you back to your age when you studied philosophy, because I'm intrigued by how you still apply the insights you gained there in your life as an economist. So that you've talked about how it has been useful to separate the scientific from the normative, or the describing the world as it is versus describing the world as you would like it to be. And I'm very interested in that concept. So I'd wonder if you could share with us a bit on how philosophy has helped you understand the global economy and how we should be mindful of this shift in our future careers.
It's a great question. Philosophy, like economics, is very broad. It runs from kind of logic to epistemology, which is the study of how do we know anything, to ethics and social philosophy. I had a wonderful course in social philosophy. It's basically the principles on which societies are constructed. And it's, enormously important in the history. The Enlightenment, different ways of thinking about ethical results. So it influenced my life. In part, it did help me try to do something that we don't always do well in economics, which is, I'm not saying we do it very badly, but there's a big difference between figuring out what's going on in the world and being able to explain it, and figuring out, if you don't like what's going on, what we could do better, right? Well, policy tends to be in that second category. Investing, for the most part, when it comes to economics, is in the first category. It doesn't really matter, what you wish the stock market would do tomorrow. It's going to do whatever it does, and if you get it wrong, you probably won't have many assets to manage in the future. And so I think that distinction is very important. The most encouraging thing to me is related to what we talked about before, which is I think we had a period in economics in which we were overly focused on the, quote, scientific, even mathematical. We ignored distributional issues, and values were not eliminated, but kind of written out of the script in a rich way. When I studied economics as a graduate student, we didn't have a course on justice or economic justice. And we didn't really have a serious course on these intertemporal choices that we talked about before that are an aspect of that. We didn't have Michael Sandel teaching a course on justice, an interactive course to 800 people at Harvard in the same classroom. Unbelievable. Now that's different, right? I don't think we can deal with all the challenges associated with sustainability, with these differential effects, with the very difficult position that the low-income countries are in, and the divisions in our own society without going back a long way in history. Adam Smith wrote 2 books. One of them was called The Wealth of Nations, a short version, which was basically about how markets work. But the other one was about moral philosophy. And the idea was you can't run a society without something that translated into the modern world would be thought of as empathy. That is related to how we think of the way we relate to other people. So we had a kind of long dry spell in economics in the desert, and I think it's reversing because people understand that, that's not the way we're going to be able to, deal with the challenges that we face. So for me, just having the philosophy background, maybe makes it a little easier, but I don't think you need an undergraduate major in philosophy to kind of intersect these issues seriously. And, they're being intersected everywhere. It's not just in economics, and in policy. I don't know where the ESG movement's going to go, but there's certainly a serious set of questions that are normative in character, that have to do with the purpose of business, how it defines itself, how it conducts itself, how well it's, aligned with broader economic and social objectives, if there are such things that are shared. It's going to be a complicated journey. There's all kinds of, roots to trip on the way through. But it was inevitable. I wrote a little article on ESG, without being critical at all, but you could see this coming, right? Imagine that as a classroom assignment, I said, why don't you design a template that we'll use on every single corporation in the country for them to report their ESGs. Now, let me just sort of explain to you in advance that this has to apply to a big bank, right? To a small business that does artisanal stuff, to an e-commerce company, that sells, employs 150,000 or 1 million people globally, I mean, I couldn't design such a template. So the question is, so what are you supposed to do and say? I mean, there is a serious question about greenwashing in the ESG world because, some companies, absent, an environment with incentives to avoid doing this, view basically the sustainability part of ESG as a marketing challenge and nothing more, right? And so you have to, this goes back to the work I did as a graduate student, you have to have a way that the people who are seriously doing something have a way to signal it. If the greenwashers are indistinguishable, because the reporting structures, just don't enable you to distinguish whether you're an investor or an ordinary citizen, then, you don't have the outcome that you really want. I'm not saying that the only reason companies will seriously engage with an ESG type agenda is because they get credit for it. I don't believe that. There's wonderful human beings out there that even if you told them you'll never get credit for it, will get on with it. But it would sure be nice to, in addition, have them get credit for it in the right way and to be able to distinguish themselves from the folks that are, think of it more as, well, this is the latest fad, we better say something. I'm being a little snide about it, but I mean, there's a real underlying issue here, and it's challenging. I just read a good book about impact investing, written by an Englishman, Sir Ronald. Oh, I should have his last name. Maybe you can, write it in when you do the podcast. I thought it was very interesting because he didn't try to solve this problem. He basically said impact investing is about people who say they're going to set out to do blank, and then you have to measure the blank, but you don't have to cram it all into the same kind of framework, if you see what I mean. So anyway, this is a journey I think we're on trying to figure out, how to do it. Was that slightly responsive?
Yeah, it was. Thank you.
No. So thanks to all my guests. That was a really interesting conversation with lots to think about. I hope you enjoyed listening in and that you'll join me again for the next episode of Story Scanner.